about different ways to build wealth.
Yeah.
And you keep hearing all this buzz about real estate. But maybe being a landlord,
Right.
dealing with all the headaches that come with that, isn't exactly your dream scenario.
Yeah, late night calls, leaky faucets, all that fun stuff.
Exactly. Dealing with tenants and toilets is not my idea of passive income. So you're intrigued by this whole idea of real estate crowdfunding, right? Like, could this be the golden ticket to property mogul status without the hassle?
Yeah. I mean, it's definitely caught your attention, and for good reason.
For sure. So we're taking an episode from the Margin World podcast.
Oh, nice.
Which is a fantastic listen, by the way. They gave a really good overview of real estate crowdfunding.
Yeah, a good intro for sure.
Yeah, they gave us the Spark Notes version, but we're here to really dig in.
Exactly. Give you the director's cut, just for you.
Exactly. The director's cut tailored specifically for our listeners who are ready to take that next step. So for anyone who's maybe hearing about real estate crowdfunding for the first time, let's break it down.
Okay, that's good.
It's like this.
Yeah.
Imagine you want to invest in an apartment building.
Right.
But you don't have millions of dollars lying around to buy the whole thing.
Yeah, who does?
Right. With real estate crowdfunding, you can actually own a tiny piece of that building,
Exactly.
along with hundreds of other investors.
It's kind of like, you know how Kickstarter's been around for a while?
Yeah.
People use it to fund creative projects and things like that.
Yeah.
It's a similar concept, but instead of investing in like a cool gadget or a band's album,
Right.
you're investing in a piece of property. Could be a skyscraper in Dubai or a shopping mall in your own town.
Okay, that is a way cooler visual than what I was picturing. I love that. And Margin World pointed out that we're not talking about needing a ton of money to get started.
Yeah, that's one of the best parts.
They said some platforms let you get in the game with as little as $500.
Which is amazing. That low barrier to entry is a game changer. It's opening doors for everyday people to access an investment that used to be only for the super rich.
I love that. It's not just about those fancy investors in suits anymore.
Exactly.
It's about regular people just like us having a real shot at building wealth through real estate. And that's what gets me fired up.
Yeah, it's incredibly empowering.
And it's not just about getting started. It's like, okay, once you're in, what can you actually do with your investment? And one of the things Margin World talked about was this whole idea of diversification.
Yeah.
Which is so important with any kind of investment.
Absolutely crucial. It's like that old saying, don't put all your eggs in one basket.
Exactly. And in this case, we're not just talking about spreading your money across like different stocks or bonds. We're talking about diversifying across different property types, locations, even different stages of a project.
Yeah, you could have a little bit in that luxury apartment building in New York City that you're talking about.
Right.
A piece of a shopping mall in Miami.
Why not?
That's under construction right now. You could even invest in a residential development in Texas that's already built, already generating income. And you can have all of that at the same time.
Okay, so you're telling me I could be a virtual landlord in 3 different states, all from my laptop. That's kind of mind-blowing. But it's not just about the cool factor, right? There's a really strategic advantage to diversifying your investments like this.
Absolutely. If one particular area takes a hit, your entire portfolio isn't sunk.
Right.
It's about creating that safety net.
It's like hedging your bets, but in the world of real estate. I got it. But here's what I'm really curious about, and I bet you are too passive income. Is this really the key to becoming like a hands-off property mogul?
You know, it's definitely a major draw for a lot of people who are interested in real estate crowdfunding.
For sure.
Just imagine this.
Yeah.
You invest in, let's say, an apartment building that's in a really up-and-coming area. Every month, those apartments get rented out. You get your share of the rental income without having to deal with actually being a landlord.
Okay, that does sound pretty dreamy, I'm not going to lie. But they did mention in Margin World that it's not always a guaranteed thing.
Right. And while that rental income can definitely be more reliable than other types of income, there are no guarantees with any investment.
That's very true. But there's something else I wanted to touch on that I thought was really interesting and honestly kind of refreshing. Margin World emphasize the transparency you get with these real estate crowdfunding platforms. They specifically mentioned Fundrise, Realty Mogul, and CrowdStreet as being really good about providing detailed information about the projects and the teams behind them.
That's so important. Transparency is key in an industry that for a long time has been kind of opaque, right? You want to know exactly where your money's going and who's managing it. And these platforms are getting much better at providing that information.
Yeah, I remember when I first started investing, it felt like navigating a maze in the dark. You really had to hunt down information.
Right.
So more transparency is definitely a good thing.
Definitely.
Okay, so we've got accessibility, we've got diversification, we've got the potential for passive income, we've got transparency. It almost sounds too good to be true.
Right.
So this is probably where we need to talk about the but.
Right. Every good story has a but.
Exactly. What are some of the risks that potential investors should be aware of before they jump in? Because I know Margin World definitely didn't shy away from talking about the downsides. So let's dive into those risks. Margin World mentioned a whole bunch, but was there one in particular that you were like, okay, people really need to understand this before they write a check?
Yeah, they all definitely deserve some attention. But the one that I think trips people up most often is illiquidity.
Okay, so break that down for me. What does that actually mean for someone who's thinking about putting their money into one of these crowdfunding projects?
So let's say you invest in this amazing new development. It's going to be condos or apartments, whatever.
Right.
And it sounds fantastic on paper,
Mm-hmm.
but then something happens, right? Maybe you have a sudden expense, a family emergency, or you find another investment opportunity that you're really, really excited about.
You need to pull your money out.
Yeah, exactly. And with real estate, it's not like stocks where you can just hit a button and sell your shares that day or even that week.
Right.
Real estate moves a lot slower.
Mm-hmm. It's more of a long game.
Exactly. You're committing your money for a longer period of time. Now, Margin World did mention that some platforms have what they call a secondary market, where you can try to sell your shares to other investors if you need to get out early, but there's no guarantee you'll find a buyer, right?
Right. Right.
And even if you do, you might not get the price that you want.
Okay, so it's not a get-rich-quick scheme, that's for sure.
Definitely not. You got to be ready to let your investment ride for a while.
Got it.
Yeah.
So you really got to have a long-term mindset. What about the platforms themselves, though?
Right.
Margin World touched on something called platform risk. What is that?
Yeah, so remember, these platforms
Yeah.
are the middlemen between you, the investor, and those real estate projects. They handle a lot of the behind-the-scenes work, like doing due diligence on the developers, managing the money, all that stuff.
Yeah, which is great, but
But what happens if the platform itself runs into trouble?
yeah, that's what I'm thinking. What if they go belly up?
Exactly.
Or there's some scandal we don't know about? What happens to my money then?
That is the million-dollar question. And it's why it's so important to not just research the projects themselves, but to really scrutinize the platforms that you're considering.
Okay, so what are some things we should be looking for?
You want to look at their track record, right?
Okay.
How long have they been around? How have their past projects performed?
Mm-hmm.
What's their financial stability look like?
Do they have a good reputation?
Exactly. Have they had any regulatory actions taken against them? Don't be afraid to ask the tough questions.
Yeah. Put on your detective hat.
Exactly.
Don't just take their word for it.
Right. Because knowledge is power.
Okay. So we've talked about the platforms, but what about the projects themselves? Margin World made a good point that just because a project sounds amazing on paper, it doesn't mean it's going to be a slam dunk.
Definitely not. It's so easy to get caught up in the hype, right? You see a luxury condo development in the hottest new neighborhood, you think, oh, I got to get a piece of that.
Right.
But the market could cool down. There could be construction delays. They could have trouble finding buyers. All those things can really impact what you're actually going to make on that investment.
So even if the project itself goes well, there are all these external factors that can affect it.
Absolutely. And while real estate can be more stable than some other investments, it's not immune to market forces.
Yeah, definitely. Speaking of market forces, Margin World also talked about currency fluctuation being a risk, especially if you're investing internationally.
Right, because not all dollars are created equal.
Right.
Let's say you invest in a project in, I don't know, Brazil,
Okay.
and the Brazilian real weakens against the U.S. dollar during that time.
When it's time to sell, you're not going to get as much.
Right.
Yeah.
You might have made money on the property itself, but when you factor in the currency exchange, you might actually end up losing money.
Oh, wow.
It's like taking a pay cut because of where you decided to invest.
Right. That's wild. I hadn't even thought about that. Okay, so we've got market forces to think about. What else?
Well, since we're talking about the wider world, we have to talk about regulations, which vary from country to country.
Right. What flies in the U.S. might not fly in, say, Europe.
Exactly. And this is a relatively new field, so those regulations are constantly evolving.
So it's not just a matter of learning the rules once and you're good.
Right. You got to stay informed.
Okay. So we've got illiquidity, platform risk, underperforming projects, currency fluctuations, and regulatory risk. Is that everything? Tell me there's nothing else to worry about.
Well, we can't forget about the big one, market risk. It's the one we all face.
Right. The market can be unpredictable.
Exactly. Real estate generally does well over the long term, but there are always cycles, right? Booms and busts. And even with the best research, there's always a chance the market could take a downturn.
So no matter how much due diligence you do, there's always an element of risk.
Right. It's about managing that risk, not pretending it doesn't exist.
Okay, so how do we do that? How do we make smart, informed decisions when it comes to real estate crowdfunding?
Well, Margin World emphasized two key takeaways, and I think they're the perfect place to start.
All right, lay them on me.
First, diversify.
Okay, love it. Don't put all your eggs in one basket.
Exactly. And with real estate crowdfunding, you have so many options to do that. You can diversify across different property types, locations, even the stage of development like we talked about earlier.
See, it's like building your own little real estate empire.
Exactly. You're spreading that risk around, so if one project has a hiccup, it doesn't tank your whole portfolio.
I like the sound of that. Okay, so diversify. What was the second key takeaway?
Do your due diligence.
Okay, music to my ears.
Right, and I know we've touched on this throughout the episode, but it's worth repeating. Don't just take the platform's word for it. Research those developers. Look at their financials. Understand the local market.
Ask those tough questions.
Exactly. Knowledge is your best defense.
It's like buying a used car. You wouldn't just hand over your hard-earned money without taking it to a mechanic, right? You got to look under the hood.
Well, on that note, I think it's time to wrap up this deep dive into real estate crowdfunding. Any final words of wisdom for our listeners as they continue on this journey?
Just remember, real estate crowdfunding can be a powerful tool for building wealth, but it's not a guaranteed get-rich-quick scheme.
It's an investment, and like all investments, it comes with risks. So do your research, understand those risks, and most importantly, don't invest more than you can afford to lose.
Couldn't said it better myself. And on that note, thanks for joining us for this deep dive into real estate crowdfunding. We'll catch you in the next episode.